James, we had a really great interview with Jorge today. I really like the idea of getting into lending. We've talked about this before, but this is a really unique
Yeah.
approach, I would say, right?
Yeah, and Patty, there's a reason we haven't talked about it, right? There hasn't been somebody that we wanted to
There's
put on
not a
the
whole lot out
podcast.
there, right?
Yeah, and so I think, Jorge, having founded On Deck, which is like one of the most well-known capital sources for businesses, and now looking at the next iteration and partnering with the ISO, I think it's pretty cool. So you definitely gonna want to hear that. In the questions from the field, I answer a question from a brand new salesperson, and the question really is, how do I get out of the car and walk into a business?
Oh, yeah, that's a tough one, right?
The anxiety of it, the nervousness, and all of that. And so I just kind of talked with her about that challenge and tried to give her some encouragement and some tips. So we're going to share that. And then tell us about the insiders.
About a new report, actually a couple of new reports on the integration of payments and software. And I think people are going to find this really interesting.
Yeah.
I don't think it's a dark cloud. As
No.
James and I talked, there's some really strong rays of sun shining through.
Yeah, I think it's just more confirmation of kind of the trends that we've been talking about, and then talking about what to do about it. So yeah, really good stuff. Obviously, our episode today is sponsored by NMI. So head over to nmi.com. Also, I would encourage you though to look at Iris. So Iris CRM, the leading CRM for payments companies. Check out iriscrm.com. That's iriscrm.com. Let's get started.
Okay.
Hey everybody, Patty and I are here today with Jorge Sun, who is the founder and CEO at Lending Front. How are you doing today, Jorge?
I'm doing well. How about yourself?
Doing fantastic. So we are going to be talking about capital for small businesses. There's been a lot of activity.
Hot topic.
A hot topic. We've seen Square come out with their capital, Stripe Capital, Intuit Capital. Everybody's providing capital. And so things have changed a good bit. And so we're going to talk about that today. But before we do that, Jorge, you've never been on our podcast before. So tell us your story. Like, how did you get into this industry? And then how did you end up starting Lending Front?
Sure. So what's interesting is I was a banker by trade.
Okay.
So I ran credit for American Express, JP Morgan, Capital One, always lending to small businesses. I actually owned a small restaurant in Manhattan. So I know what it is to actually own a small business. But putting that together, what's actually the most interesting is I was one of the founding team members of On Deck. So if you know On Deck, talking 3 people in the room saying, hey, how can we lend to small businesses better? Right? How do you scale it? I was part of that team. And my co-founder, Dario Vergara, was also part of that team. He was our CTO. I was the head of credit analytics. So pretty much pioneered, how do you get capital to small businesses?
Sure.
And Lending Front is really what I would call sort of the next phase of what I've always thought was the solution to get capital in the hands of small businesses by allowing platforms, whether it's a platform that has a lot of small businesses in it or a bank that has a lot of small businesses in it, the tools they need to deliver that capital in a way that's friendly to the small business.
But also is protecting the company putting the capital out and making sure they're making smart decisions.
Correct.
Yeah. Right. Cool. So what I would love to hear from you, and this is so great because you've been doing this for so long. So talk to me about when you look at the last, let's say 10 years, obviously 10 years ago, a lot of small businesses, were getting merchant cash advance, where today that's become a lot less popular due to other options and things like that. So what have been the major shifts that you've seen in the marketplace over the last 10 years? And what have you seen as kind of this iteration of capital to small businesses?
Yeah. So I guess the way I would describe it is if we kind of understand why small businesses are in this pickle, right? In terms of like, why do I get merchant cash advance? And that's all I get. Is because the way the world works today, especially when you think about a bank, right, that has a primary relationship with the merchant, is they really only have one way of delivering capital, right? And that is through a banker,
right,
at a branch, right? And that machinery caters towards your larger commercial borrowers.
Sure.
Right? Because they want to build a relationship with you. And that's like expensive machinery. So if you're a small business looking to borrow $50K, you don't fit. Right? And even if they say yes, and they're going to make any money. So the machinery doesn't work for you. You're probably not going to meet the standards that you need to meet because you're essentially being put in the same bucket as these large commercial borrowers. And the products themselves, think about the product, right? The products are, I want to give you a 5-year term loan.
Right.
Right. If you're a small restaurant, does that make any sense?
No.
Probably not. So MCA was sort of the outlet of, hey,
Mm-hmm.
we'll give you money at an extremely high rate because we can.
Right.
Okay. When we did On Deck was sort of an evolution of how do you take sophisticated lending and try to break that, you either get 5% or 200%, process, and maybe hopefully give the customer 30%.
Right. Someplace in the middle.
Yeah. So begin to use technology and really begin to show the market that small businesses are solid businesses, right? And that they were using the wrong tools and the wrong data, right? If you think about what a bank wants, is they want 3 years of financial statements, right? To analyze you. But small businesses throw off cash flow all the time, right? Their merchant, their credit card payments, their bank account information, and that's the source data that goes into your financial statements.
Right.
And what's interesting is most big institutions can't absorb that, right? Because of the manual processes. So the biggest change over time has been the adoption of a different way to consume data that's more relevant to the small business, right? The advent of more players realizing that, yes, I can lend to a small business if I look at data that's more relevant to them, but also data that's more recent, right? Like think about 2019, 2020, 2021. Do you think looking at the financials of a business in 2020 will make any sense? No, right? But if you look at businesses that were throwing off cash flow from last week, right, it makes a lot more sense, right? Because you can see the trends, you can see who's making money. So what I would say is there is now a greater level of adoption, greater level of willingness. And certainly that's where we play a part of us bringing more sophisticated traditional lenders around to say, you know what, if I use a different tool set, if I use the data that small business has, and I do it in a way that fits within my machinery by connecting this other technology platform, I can lend to them and I can give them, essentially capital at a fair rate. Right. So there's more of a grid of adoption. And I would say that has accelerated significantly post-COVID.
Yeah.
Because if you think about it, right, the whole you need to come to talk to a banker, to a branch broke, right? You couldn't do it.
Right.
So all of a sudden they're like, oh my God, I need a different vehicle. I need a digital vehicle to touch the merchants. And that's the biggest thing that we've been working on. And that's why the conversation that we're having today around why ISOs are an incredibly important space, right? In terms of how they can leverage this is so relevant.
Right. Well, if you don't mind, I just want to get a big picture, if you could,
Sure.
for our audience. In terms of what do you see the demand today for capital in the small business market, and in particular, I'm really curious about programs like the PPP, the Paycheck Protection, and the other SBA, other lending programs that came out of the COVID era legislation. If that's had any impact on supply and demand.
Yeah, so I will say that demand is still an all-time high.
Okay.
Just to give you a sense of the way demand, how underserved small businesses are. So small businesses, there are 32 million small businesses in the US. 85% of them are a little less than are about $1 million in revenue. So they're massively small, right? This is massive long tail. Yet small businesses represent about half of all employment in the US,
right,
and about half of the GDP, right? So they're incredibly important, but they only get about 20% of the debt capital, right? So they're half, but they only get 20%. That equates to about $800 billion gap, okay? So there is massive demand. We're not even close to meeting the demand that these small businesses need. right? That's why you see like the what you mentioned, right? That's why you see companies like Square,
Mhm.
right? Like QuickBooks, all these other players delivering capital because the demand's there, right? Banks are not filling that yet.
Right.
And programs like governmental programs like PPP, or especially SBA, don't even make a dent. Do you know that like the
Well,
number
many of
one?
those,
Hmm?
many of the SBA programs, you really need to have a relationship with a bank anyway, right?
You need to have a relationship bank. They're actually slower than the standard commercial
Mhm.
process.
Mhm.
So you'll need literally like 6 weeks to get through the process if you're
And
like,
maybe a consultant to help you
Minimum.
through the
and a
process.
consultant, and you know, they're
Right.
trying to give you a 10-year loan.
Right.
Well, how does that matter when you want 50K?
Yeah. Yeah.
Right? Like, and I don't know if you've seen the numbers on the SBA side. Like, banks are happy when they tell you to do 1,000 loans a year.
Mhm.
Like,
Right.
that doesn't do anything for anyone.
No, that's like not a drop in the bucket, right? Yeah.
Correct.
Yeah. Yeah. So, okay, let's shift gears a little bit. Okay, let's say I'm an ISO. Maybe I have 10,000 or more merchant accounts, a steady flow of new accounts coming in
Mhm.
every month. Should I consider offering a lending tool to my merchants, and if so, why?
Capital? Yeah.
Yeah.
So I will answer that question two ways. So the first answer is absolutely yes, right? And the way I want you to think about this is, what is the future of, I guess, small business banking or relationship building, right? It's digital, right?
Mhm.
And what we do is we provide an embedded banking solution, meaning we can embed into, let's say, an ISO's portfolio,
Uh-huh.
right? And allow their merchants to receive banking offers real time. Okay. Which is different than the current
Based
model,
on
which
their
is
activity,
hmm?
based on activity that's
Based on activity, right? So
Mhm.
you look at the flows, the stability
Right.
of payments, and you're like, look, this is a $2 million business, it's
Mm-hmm.
growing. Banks on the other side are going to want to get in front of that, right?
Right.
Because that's superior to going to a branch, come talk to me, right?
Mhm.
You're selecting who you can talk to. And the reason the ISOs want to do this is, think about it, right? It's really hard to get customers, right? If you do nothing, you're a one-trick pony.
Right.
So if you are able to deliver capital, especially, this is the key part, this is not MCA, right? MCA is only good for your bottom 15%, right?
Right.
So bottom, the customers that are really desperate.
And pretty much
This is
restaurants, right?
right. This is, how do I touch my other 85% with tier one money,
Mm-hmm. Mm-hmm.
right? And then what happens there is you're doing two things. One, your cost of acquisition goes down, right? It's basically cut in
Right.
half because now you have two revenue generating products. You just, right. So whoever takes that loan, your cost of acquisition is basically half. Second, when you take a loan, the average term, right? Because they take a renewal, it's about an incremental 18 months
Right.
of staying with you. So your retention basically
you're
increases by
right.
18 months.
Right.
So not only are you making money on that loan, but you're making money on the payments relationship, right?
Mhm.
And then lastly, you are now becoming a financial services solutions partner to that merchant,
Mhm.
right? How do I get, like with you, they essentially are getting potentially pre-approved banking offers.
Right.
Versus if they're not with you, they have to go through the traditional, I need to go into a branch and talk to a banker, this is going to kill me, right? So this makes all the sense in the world because big players like Square, that's what they're doing, right? They're basically saying, here's payments, then I'm going to layer in lending, and now I'm going to layer in deposits. So
Right.
what
Right.
we're doing is essentially allowing an ISO to compete head to head with a Square without having to become a bank, because we'll bring the bank to them.
Love it. Yeah, I think it's, for those that haven't really experienced it, I mean, it's pretty slick now. You go to
Mhm.
you log into QuickBooks, they want to loan you money. You log into Stripe, they want to loan you money. You log into Square, they want to loan you money. You go to Bluevine, they're trying to loan you money. This is very, very competitive. And the scary thing about it is, all but one of the companies I just mentioned are offering payment processing. And so they're not just trying to get your, the lending, they're using that as a hook because they want to get the payment processing. They want to keep the payment processing.
That's right.
So what I would be curious to hear is, let's say that this ISO is like, okay, cool, I want to do this. So I want to make capital available to my merchants, but they say, I don't want to be the bank at all. I don't want to put any money at risk. I just want to have a revenue source. How does that work? Who's actually lending the money? And like, give us a little bit more context of how that works for them.
Sure. So we are a platform that banks use to lend.
Okay.
So think of us as, I'm a bank, I have 100,000 merchants, I have a merchant services business, right? So a lot of banks have a payments business. So we've already enabled them to sort of use sort of the same Stripe model, Square model on their customer base.
Right.
What we're doing now is saying, because they're also saying we want to acquire, other banking relationships, right? So what we're doing is allowing your ISOs, if they don't want to take on the risk, to plug into those banks, right? And the banks are comfortable because it's essentially the same process, right? It's a small business that takes credit cards, it's the same type of information, and they're sitting on lending front rails. So it's not the typical like, oh, you qualify, I'm going to send it over a fence and I don't know what's going to happen. I'm going to wait a couple, days, weeks for it to come back and maybe it's approved or not. This is all on the same platform. Basically, the bank is getting an automatic feed saying, look, this is the merchant. It fits your profile. The bank says, absolutely, right? Because a bank is not married to merchant services, right? The bank has a lot of different products. And what they're struggling with, right, is, and this is the typical scenario, right? I'm a bakery, right? I do $1 million at the beginning of the year. By the end of the year, maybe I'm at 3 million. So I'm killing, right? Like people are coming to my bakery. So what does that mean when you have that level of growth? Well, it means there's probably an AR AP imbalance, right? Because there's a lot of growth, so you need a line of credit. Okay. And I guarantee you, your ISOs have customers like that.
Oh yeah.
Right. And that merchant's like trying to figure out what to do. And the MCA is not going to offer that, right?
No.
Second, right, you're going through your machinery probably. So you need a term loan, right? Because you need to replace stuff, right? Or you're growing so fast that you need to expand, right? You need to, maybe you need to buy your building. An MCA isn't going to help you with that. A bank is going to say, I want to give you a, commercial real estate loan, right? Then you're the owner of that business. So guess what? I am doing extremely well. Well, I need an auto loan. I need a mortgage, right? So a bank's thinking, how do I leverage somebody else's relationship with real-time data on a business that I know, right? Understand, right? So I can build this digital relationship. And that's where an ISO can take advantage and say, I own this relationship. I built it. Pay me a referral fee for every product you want to push this customer, right? Without risk.
Right.
Now, one of the things I can already imagine our audience thinking is most of these banks do offer merchant services, right? So how does your platform kind of protect that relationship? So the ISO says, well, yeah, I do own this relationship, but I don't want the bank to then sell payment processing.
Yeah, that's a great question. So we have different types of banks on the platform. Okay. So we have banks that do have their own merchant services and we have banks that don't. And the ISO can decide, or your listeners can decide who they want to work with, right?
Okay.
What's interesting is we work with a lot of small community banks. And most small community banks don't really have a big merchant service.
They might be referring people to a merchant service provider, but they don't. It's not like a core offer.
That's right. So what you can do, is essentially say, look, I'll give you an example. We work with community bank in New York. We work with a community bank in Massachusetts. Okay. So if, for example, you have a client, a merchant from your client that's in one of those states, they may get a different offer based on the state they're in, because you want to push them maybe to a community bank that's like next to them, right? Not a big national player that's going to be sort of not as welcoming.
Yeah.
So I don't want to say like we have hundreds of banks, but we have enough banks that, at least from the conversations I have, think of this as, they don't want to go and like, I guess, kill the golden goose, right? Like, why would I shut off and try to steal the merchant relationship on somebody who has 10,000 merchants and they're good quality merchants and they're going out there getting them. And all I'm doing then is just looking at the data and sending offers. Like, that's great.
Yeah, for them, that's perfect. Gives them a chance to put their capital to good use and get a good ROI. So, so yeah, this is super interesting. All right, so now let's talk about, I mean, obviously in our industry, one thing that's interesting about it is, even though, people are always talking about kind of the demise of the ISO and, our industry is the dinosaurs and, and all this, the truth is our industry makes a ton of money. And most of these ISOs have an enormous amount of cash flow. They have access to borrow whatever they want to borrow, get whatever they want to get from investors. I mean, this is a very, very liquid industry. We have private equity is just like eating our industry alive. And, so let's say we have an ISO and they look at this and say, well, I don't really want the bank to be in contact with my customer. And I don't really want the bank to make any money off of me. I think I'll make all the money. So they say, I want to get the capital and I want to do this, but they don't understand lending really. That's not their core competency. How could they work potentially with LendingFront to become their own, take the risk and be able to loan maybe some or all of the money to these people?
Yeah, that's a great question. So what's great about LendingFront is we would just license them the technology, right? Because then they become the lender,
right?
What that basically means is we provide them with the front-end components to take the application, the workflow management to work through all the applications, actually the decision engine so they can put in their rule sets. Because we have so much experience, we can tell, we have a score as well. Think of it as a FICO score, right? That says, here's the odds you choose, right? Because you're the lender, so you have to decide what your cutoffs are. But you have essentially a what I would call a lending box you can start with, right? To start the machinery, right? You still need to hire an underwriter, right? You still need to hire some people to move this process. But the difficulty of like, do I need to buy the tech, build the tech, and what's the score and all that's built, right? We do that today with a lot of clients that want to lend their own money, right? They're not banks. It's just a question of how much of the pie do you want?
Well, that was going to be my next question is, can they, because I know like with Merchant Cash Advance, a lot of ISOs made a lot of money by, covering 10% of each loan that went out, that sort of thing. Is that sort of thing available with this as well, where they could say like, they're sharing in it, or is it more kind of like you choose which loans you want to do, or how does that work?
Yeah, I mean, so think of the platform as the ability for you to decide how much do you want to lend to somebody, for how long, under what conditions, right? Like you just first thing you need to decide how much you want to lend to whom, right? Then you're collecting on that, or you're about to collect on that, and then the question becomes, how much of that do you want to hold, right? Do you want to sell some of that off?
Right.
And we support that, right? Our machinery allows you to sell pieces or the whole thing to somebody, and then just
so it's more like traditional banking, where the ISO here would kind of be almost like the branch level bank, where it's like they're putting the money out initially. They're going to loan somebody $50,000, right? And then you're saying maybe they can package that up. They've done a 50,000 loan to 100 people, right? Now they're going to package this up and they're going to say, I really want to sell half of that or 75% of it to a larger bank at a good rate. I'm going to arbitrage the difference.
Yeah. Well, I would say this from an ISO side right now. So the way it works right now is you start doing your own lending.
Right.
Chances are you can syndicate it out, but it's on a loan by loan basis, and maybe a bank will play or not, right? It will probably be somebody else like you, right? Like another ISO who says, I want a piece of that as well, right? But we are working with, so part of the whole referral component, right, is there is a lot of demand from these community banks to get exposure to small business lending. The problem is, and what's funny is I didn't know this till I started really talking to a lot of community banks about, hey, you say you want to lend, but what's the problem?
Like, why aren't you
What happens is, $1 to $5 billion banks don't have a lot of staff. They just don't, right? Especially in operations and lending. And if you ask them, hey, do you want to stand up a team to do 100 loans, right? Small business loans at $50K. It's really hard for them because they need to hire people. They need to put all the machinery to, sort of track this stuff and compliance, right? It's hard, right? For that. But if you say, would you like to buy one loan that's made up of 100 small loans?
Right.
They do it
Sure.
all day long,
Mm-hmm. Yeah,
right?
sure.
And that's where sort of this mechanism of, hey, originate your loans and then you can
Interesting.
package them and sell them. And that's starting to really accelerate,
Yeah.
Mhm.
right? And that's what's exciting, right? The market is moving fast.
Which is really actually how community banks got into lending way back when. I mean, they would package up these loans and sell them to their upstream correspondents.
Right. And
So
now
it's sort
they're
of like coming back around again.
yeah, they can streamline it now. So yeah, that's great. I love it. So yeah, I think this is just super important. Jorge, I'm sure a lot of people in our audience are going to want to learn more. Where would you send the ISO to, learn more about LendingFront?
Yeah, just can go to our website, www.lendingfront.com.
Okay.
They can enter their information, that request a demo or a meeting, and happy to take them through the process.
Love it. Jorge, this has been super interesting. I'm sure we'll talk again. And I just love what you're doing. I think it's fantastic. I think it's anytime the ISOs get a chance to take advantage of cutting edge technology where they can compete with head to head with Square, Stripe, Intuit, and these others, while at the same time making a lot of money. I'm always on board for that. So
Yeah.
thanks so much for taking your time to share the insights today. Really appreciate it.
All right, my pleasure. Thank you for having me.
Yeah.
So Patty, I had a great conversation with VJ myself
Okay.
recently, yesterday, actually, I think it was, as the time of this recording. But one of the things we were talking about was just the next gen ISO and this idea, and you talked about today about the ISV model and all that. And so what's happening here is for the ISO that has the distribution, okay, and their core competency is salespeople. And this is so relevant for this entire episode because you talk later about this as well. But business owners want to talk to people when
Right.
they buy payment services, and ISOs have people. And they're very good at that. They have that core competency. What they're lacking a lot of times is the integration and understanding how to become a next gen ISO. I've talked to several people recently about, ISOs need to be acquiring technology companies to start this IT department. They know they're not going to do it on their own. They got to buy the
Right.
culture from somebody else. And so there's all these different moving parts. And like, well, when I buy the tech company, how do I make sure I have a really smooth onboarding process? How do I make sure that the payment processing is working with their system? How do I get their developers to integrate with our payment processing? There's all these questions that come. To become a next gen ISO, you have to have a processor agnostic partner in the technology space that's going to bring these worlds together for you of payments and technology. That is exactly where NMI sits. They are the partner you're looking for on the tech side. So if you want to become a next gen ISO, an ISO that is, where technology isn't an afterthought, it's not this other thing you do, it is the core of your business. It is integrated with everything that you do. If you want that, you need to go to nmi.com and you need to learn more about partnering with them to facilitate this technology integration that you're trying to build out.
Yeah, because you're basically going to get all the technology you need in a single place.
Yep. So head over to nmi.com and check it out.
So I'm not quite sure if it was so much a question, just as just the straight fear of my goal for the day is to go door to door, and then I get in my car and I find out that I'm really just driving around putting miles on my lease and wasting a lot of gas.
Yes.
And it's just very fearful, and it literally freezes me to the point where I'm like, okay, well, I guess we're going home for the day and watching more videos.
Yeah. So, first of all, the thing that's most important to know about this is that you are definitely not alone with this. This is probably one of the most common things that happens, especially in our industry. As I talk to salespeople, they really struggle with this. So there's a couple things I will tell you. And I mean, I struggle with it as well. I mean, obviously there's many times where for me, it's audiobooks. So I'll get started on audiobook. And then that's my excuse, you know what I mean? I'll be out in the field and then it's like, oh, I'm going to finish this audiobook before I walk in, you know? Right. So we always find these ways to procrastinate. So here's the thing you want to do. Number one is you have to change the reason that you're going out in the field in the first place. So what I find usually when I'm talking to agents that are struggling with that and I say, well, why are you out in the field? And they're like, well, I'm trying to make sales. And I'm like, that's why. So when I go out in the field, I'm not going out in the field to make sales. I'm going out in the field to meet business owners and network. Right. And so, that's a very subtle shift, but it's really important because when you get it in your head that I got to go make a sale. Well, then then you're like, well, how am I going to approach it? And when I walk in, what am I going to say? And what if there's already people in there? And, versus if you say, hey, I'm just out here to meet some business owners today and just to talk to them, give them my business card. And that's the only reason I'm out here. Well, now all of a sudden, all that kind of shifts a little bit, and you're like, well, I can do that. Like I can go meet business owners. Then it's all about you starting that conversation with them. I mean, naturally, it's going to flow to the same place anyway, right? You're still going to be talking about sales and all of that.
I hope so.
You hope so, right? Or maybe you don't, which is fine as well, right? Maybe it's obvious they're not a good fit. Well, that's fine because you weren't in there to sell them anyway. You were there to meet them and to try to help some business owners. So I think, changing the reason. And then the second part about it that I like to do is I like to change the approach really significantly. So, there'll be days where when I was selling full time, there were a lot of days where I really was in a good mental place. Usually it helped me to listen to a sales program or something while I was driving out. I like Fanatical Prospecting. I usually go back to that one. I really like that book, but I listen to these sales programs. Sometimes I was in a really good mental place and I would walk in to network, but I was like super confident and I'm like, hey, how's it going? I talked to him for a minute and then say, hey, let me tell you what I can do for you guys. And I was just very confident. Other days I could tell I just didn't have it. And I was like, I just don't got it today. So when that happens, what I do is I completely shift my pitch to a survey pitch. So the survey pitch is when I go out in the field, I'm not actually going out there to sell them anything regardless, like no matter what they say, I'm not there to sell them that day. So the idea with the survey pitch is I'm literally there to do a survey. So I'll walk in, hey, how's it going? Great. Hey, I just had a quick question for you. I'm actually doing a little survey. So I'm a local business owner, just getting started in this area or whatever you have to say, or I'm selling a new product or whatever the excuse is, right? And the reason I'm stopping by is I'm just trying to do like a real quick 3-question survey that I'm asking as many local business owners as I can, just to kind of make sure I'm on the right track with what I'm doing. Do you have like a minute to answer these 3 questions? And then they'll say usually yes. And then you have your 3 questions that you plan ahead of time, which are probably something like, depends on what you're selling. Let's assume you're just selling like dual pricing, right? You could say something like, have you ever been to a fuel station that charged a card price and a cash price where the card price is a little higher? And they'll usually say yes. And you say, was that like an acceptable practice or did you feel like that gas station was being dishonest? No, I didn't think it was dishonest at all. Okay, awesome. Well, the third question is, have you ever considered doing a program like that in your business where you have a different price for cash and card? Right. So something like that. And I just made that up off the top of my head, but you get the idea. I've done all kinds of different ones, depending on if I'm selling technology or if I'm selling payments, whatever my main kind of lead in. But you have these 3 questions. And then from that, you can then, depending on how you're feeling in that moment, you can either go for it and you can say, well, that's awesome. That's actually what I'm here to talk to you about. You know what I mean? And then you go into it. Or you could say, well, that's great. What that tells me is probably you would be a good fit for the program that we're rolling out because that's what it is. We're helping business owners with that. Is there a time maybe later this week or next week where you'd have like 10 or 15 minutes? I'd like to come in and actually explain what we're doing, get a little more feedback from you if you have a little time, or maybe you've got 15 minutes right now. So you can, and then I'll tell you one other little hack for this is, it sounds really childish. So it's like, I don't talk about too much on content, right? But it's just the truth is that you got to reward yourself. Like a lot of times people forget that like when you're out selling independently, you're not only the salesperson, but a lot of times you're also the manager like of yourself. And so you don't have anybody to give you positive like reinforcement. So like for me personally, back when I was selling full time, say 12 years ago up to like 6-7 years ago, what I would do is I would walk into 20 businesses. And then once I walked into 20 businesses, I would go have like a snack that I wanted, or I would go sit in get a lunch that I wanted and listen to an audiobook or whatever, go get an ice cream, but like every day when I would start out like a little kid, I would kind of have my objective and it's like, okay, so I'm gonna, and the objective is clearly based on effort. It has nothing to do with results. I don't ever go out and say, once I close a deal, I'm going to do X. No, I don't do that because now I've got that fear again of like, oh, am I going to get, it's like, okay, I'm going to walk into 20 businesses. Once I do that, I'm going to stop and I'm going to go do X because that's what I want to do. And I'm going to go do that for an hour. Then I might try to go to 10 more. We'll see how the day goes, or maybe I won't. Maybe I'm done. Right. But I would set that objective. And that would really help me to just get out and get into the businesses. And then again, I would use all those tactics of, I'm here networking. That's the kind of language I would use when I walked in, is the kind of language you would use if you were networking, and then I would do the survey pitch. So, what I would say is at the end of the day, you walking into a business and having a conversation with a business owner, if you do that enough times, you're going to win. So what do you have to say to yourself to get you to do that? Right. And so for me, that was, I'm not here to sell. I'm just here to network. I'm just going to do a quick survey. And if I did that, then I could make myself do it.
Yeah, I did the phone calling because I have experience in business development.
Oh, that's cool. Okay.
Like in a call center. So I've listened to tons of your videos, and I started with that after like 2 weeks. I'm like, I'm done. I'm just gonna call.
Yeah.
And that was like you said, I'm just, I just started a business. I'm new to the area. I just wanted to introduce myself, drop off some information. Who would I speak to? Get the owner's name and a roundabout time that they would be there.
Yeah.
And then when it was time to go do that, I just froze. I was like, okay, well, I guess. And it was, disheartening because I put in all this work and effort into calling all these businesses and getting the information.
Right.
But then when it came to actually going in, and I was like, well, what do I say now when I go in there? You know what I mean? So that's where I just get stuck.
Yeah. Yeah. And again, so let's use that as a really specific example, right? So when that happens, right, you have to take a step back and understand that right now, because you're newer, you have to approach this thing in phases, right? So you did the phone call, that's huge, right? So you figured that piece of it out. Then the next step could be literally go in and drop off some information. Like that's better than not walking in, because it gets you, gets you used to that. So you might say, for the next 20, I'm just going to get a trifold brochure for my processing company. I'm literally just going to walk in, hand them the information and say, thanks so much for taking time to look at this. Like, that's fine. Like that is success for that day. Right. Then the next day, next day you have 5 or 6 more. And now you say, okay, for these, when I walk in, I'm going to try to do that survey pitch. And I'm just going to ask them.
That.
Okay. Yeah. Does that help at all? Does that make it easier for you?
So I was a lot more successful, and I am new to this area. I moved from New York, and I'm in Myrtle Beach now. So I am very unfamiliar with my surroundings. It's off season right now. Places are opening later in the day.
Right.
Traffic is much slower. So it makes it a little more difficult where, if I was in the city, it would be no big deal. Right.
So help me understand that. You mean it makes it more difficult in what way?
Well, like where I'm from, businesses are open at 7, 8 o'clock in the morning.
Right. So you're saying you don't have as big of a window.
And there's more like of those mini malls that you've talked about and things like that, where you can hit one after another. Yeah. It's kind of not like that around here. You can't walk a mile you got to get in your car and drive a little farther down and then stop at a business. And then, businesses are closing temporarily now during this time back until, they'll open up again in February. Or you're meeting with owners and they're like, oh yeah, I'll see you on Tuesday. But then you show up and it's like, we're closed Monday and Tuesday. Right.
Right.
So you're like, okay, well, they just told me that because they didn't want to meet with me, is the thought process on that, where some people may just simply forget, but being new and very nervous, you're like, okay, they didn't want to talk to me. Like they weren't interested.
And maybe that is the case. You know what I mean? That's fine. But here's what I would say.
Get to us.
Yeah, but I really wouldn't worry too much about that. And here's why I say that. I think the efficiency of like, oh, you lost a couple hours of time or some businesses are closed. I mean, you have a much bigger problem right now, right? Your problem is you got to be able to contact these people and then walk in and talk to them.
Yeah.
Right. The window of time is kind of irrelevant right now. So I wouldn't worry about that as much. What I would say is, again, just keep kind of lowering your standard of expectation on yourself until you're able to take consistent action, then increase the expectation. So again, I mean, to be really clear, I'm saying like, it might literally be that you're going to walk in, hand them your business card and say, I just want to introduce myself. If you ever need anything in terms of payment processing, point of sale systems, or have any questions about that, I'm a local business owner that deals with that. And I really appreciate your time. And you hand them the business card and they say, okay. And then you leave. That's fine. Like if that's what you need to do for 3 days or a week in order to get used to making the call, setting up the appointment and walking in, fantastic, right? Then you're going to get to the next week. And the next week, you're going to say, okay, now I'm going to raise the bar a little bit. I'm going to do that same thing, but then I'm going to say, I actually have a 3-question survey, right? And then you're going to do that every single time. Do that for like a week, right? Then you're going to say, okay, now I'm going to try to actually, talk more about it while I'm there after the last question of the survey. I'm not going to leave after that. I'm actually going to like keep talking about it. So you have to like position yourself for success by, slowly ratcheting up the expectation on yourself. But you have to have that foundation of action. Like you have to be walking into 10 to 20 businesses every day or contacting 10 to 20 a day through the phone, but you've got to be doing one or the other. Otherwise, you can't succeed. And so you have to do those things. For sure. Right. And then once you have that foundation of action, it's actually not as hard as you would think to increase the expectation, because honestly, a lot of the nervousness, to really be honest, like when you actually go out and do this a lot, a lot of the nervousness is about the unknown, you know, like, and people don't ever talk about this, but it's just such a real thing. Like when I'm going to walk into a business, I mean, what am I going to do? Like, what if they have a line of people, right? What
I
if
play
it's
the
like,
customer, like you say, like I look around for a little while because
right.
it's nerve wracking. Do
Yeah.
I get in line? Do I not get in line? Do I
Right.
speak up? No. So
Yes.
I've watched all that and I play the customer.
Yeah, you do all that, but this is my point. My point is you're going to be a lot less nervous about that after a week of just giving them your business card. Because even to give them your business card, you're going to have to navigate all of that. You know what I mean? And after
Mhm.
you've navigated it like 50 times, your comfort level changes. And you're just like,
Yes.
okay, I'm not as nervous about walking in. Like you kind of know, like, oh, I'm walking into a restaurant. It's, 10:30 in the morning. They're probably in a rush to get ready, but there's no customers. Like, you know what I mean? You just kind of like know more what to expect and you feel more comfortable. Then
Yeah.
when you walk in, you feel more comfortable to go to the next step and have those conversations.
No, for sure. It all makes sense. I agree. It's just
Yeah.
like you said, doing it.
It is. It's really hard. What I would say is really, really find a way to like, again, here's a question to ask yourself. What would I be willing to actually do 10 to 20 times a day with a business? You know what I mean? Like there's going to be something, right? I mean, if you're going to, and again, I don't know you at all, right? So, I mean, assuming that you're cut out for sales and that this is what you're supposed to do and that you're passionate about, right?
I think I am.
And I agree. You seem like you have that personality, but I mean, there's, other people will listen to this. And I mean, there are a lot of people who are great people and they're fantastic at a lot of things, but they're not supposed to be in sales like that. You know what I mean? That doesn't in any way determine, how someone is valuable, profitable, or their career. It just, I know tons of people who are super successful that like, if they had to walk into 10 businesses a day and they would just die, like there's no way they would ever do it. Like no matter how much training they got, like that's not in their DNA. They're not going to do that. And that's fine. But assuming you're cut out for sales, I think the key is lower that expectation down to say, well, I would be willing to at least walk in and hand them my business card. That doesn't freak me out. Then do that. Right. Then raise the bar to the next thing and just keep raising that
No,
bar.
I definitely think I can do that.
Yeah.
I also expect a lot more of myself. So
I know.
I know.
And it's so hard for me to tell salespeople.
And you're like,
I know it's hard to tell salespeople that the way to succeed is to lower the expectation because that's kind of like, that's counterintuitive. Like that's not how we
want to make money.
Right. You want to make money. You want to go. But the thing is, the fastest path to you taking action and making money is actually to lower the expectation on yourself and give yourself. And again, it literally could be even like a couple of days. Like if you do that for a couple of days, you may be like, I got this. And I'll tell you what else is funny about it. Even though your expectation is super low on yourself and you're like, okay, I'm just going to hand him my business card. That's not what's going to happen. Like when you actually get in there and hand him your business card and you're talking to him, somebody's going to say, well, tell me more about what you do. And you're going to talk to them. Like, you know what I mean? It's going to happen anyway. It's not going to happen as much, but like you are going to get some results from that. So it's like, get yourself in a position to take action and then just do your best from there and then keep ratcheting up your expectation on that interaction as you get better at it. I certainly wish you fantastic success and welcome to the industry. I know it's a crazy industry.
Yeah, good. I appreciate it.
Okay, so James, we have spoken a lot about the trend towards integrating payment processing with software.
For sure.
I know that this is a favorite topic of yours, especially.
Indeed.
I just got done writing a pretty large feature about it, coming out in the Green Sheet later in the second half of November, towards the end of November.
Okay. Awesome.
So in doing that report, I came upon a report. In doing that story, I came upon a report from the consultancy McKinsey that puts all of this into perspective. And I thought that, I'd share this with our audience and also kind of like an attaboy to you, because a lot of what I read in this report is stuff that you've been writing about in your Merchant Sales Insights, a couple of them that I've read.
Thank you. Yeah, I was glad. I read the report as well, and I was glad to see that McKinsey has finally noticed what's going on. So that
I know, right? It's like McKinsey should hire James, but that's okay. Probably not.
I think I'll be an independent consultant.
I like it better that way. But the upshot, of course, is that merchant acquirers and ISOs need to act quickly to address this trend or risk irrelevancy. It's interesting. I spoke with Vijay Sandhi, who of course is with NMI, our sponsor, when I was doing my story. And he had this great quote. He's like, for those who don't like change, I can assure you they like irrelevancy less.
Yeah, exactly.
And I think that was, something here. So anyway, McKinsey surveyed over 800 businesses for its annual merchant acquiring survey, found that nearly half, 48%, now use ISVs for payment processing, and 15% are in the process of making that transition.
Yep.
And which ISVs are they using? Primarily Square and Clover. Toast is a close second in the food and beverage vertical, where overall ISV adoption stands at 65%, which doesn't surprise me. I know you know we've spoken to several people on the podcast that are targeting that vertical. You know, small businesses are drawn to ISVs by their growing list of value-added services. 70% of the surveyed firms said they use at least one value-added service from their payment processing providers. These include business credit cards, fraud management, accounting solutions, payroll. Those are like the top 4, all of which were cited between 30 and 40%, which is, you know, significant, I thought.
Yeah.
But here's the stat that really stands out to me. Small businesses that are not using ISV payment providers, in other words, those that are using the legacy providers, are 3 times more likely to switch to an ISV in the coming year than are those that are already using an ISV, likely to switch to another ISV. So in other words,
yeah. So in other words, if you're not integrated with if you're not using an ISV to run your business, you're about to.
yes, exactly.
Yeah. Well, and I think one thing I'd interject that I do think is interesting here. I mean, one thing to clarify about this report that I felt like they kind of got wrong is they didn't seem to really understand our business very well. And what I mean by that is, you know, yeah, Clover is one of the ones. Well, Clover is sold almost entirely by ISOs.
Right. Exactly.
And so it wasn't a report of saying, you know, ISO versus ISV. It was which is the way they positioned the survey, which was incorrect. But you know what it was just saying there is a trend that businesses are all switching to using software to run their business. Now, the variable is, are those software companies integrating with companies' payment processing that's benefiting the ISO agent channel, or are they becoming their own PayFac or using their own PayFac-like service and cutting us out? Right. And there was some other reports that you've talked about in the past and things that covered that question. So I think that's important to note too. This is just about ISV adoption, not necessarily who's doing the payment processing for the payment
processing. Agreed. And like you said, I mean, I kind of chuckled when I saw them listing Clover, for example. Right. You know, because, you know, it's First Data or Fiserv. I also thought it was interesting. They talked about Global Payments having purchased thousands of ISVs. Well, not necessarily, you know, that there's a lot of partnerships, but these aren't necessarily ISVs that are going after the payments component. But what was interesting about this report is that it came on the heels of a report that I also came upon from Credit Suisse.
Okay.
And I thought that was interesting. It said that, and I think this is a little bit more realistic, shall we say?
Okay.
They estimated that software-led payments account for about 16% of payment processing volumes, and that these payments are growing at about 2 times the industry averages. So that by 2023, they expect about 1 in 5, 20% of payments volume to be going through these companies. And one of the things that Credit Suisse said, which is not surprising, is that these companies that provide both software and payment processing see attrition rates of 10% or less.
Yep.
Now, here's another bright spot. Here's another bright spot I thought about some in all of this reporting, is that ISVs focusing on sub-verticals could snag share from the likes of Square and Toast. And they use examples like pizza shops as being a sub-vertical of food and beverage, which made me chuckle because I know you talk about pizza shops a lot.
Oh, yeah.
I think about it in terms of healthcare. You have so many sub-verticals within healthcare.
Right, of course. Sure.
You know, and so here's a quote that I just thought was interesting from the McKinsey report. It said, the same formula that allowed Square to displace incumbents is now letting newer companies penetrate subverticals, underserved subverticals.
Yeah, absolutely.
And one way to achieve this is by continuing to embed value-added services into the mix.
Yeah. Well, and I talked about this I don't even think of the Merchant Sales Insight is out yet, but I was talking about this recently in one that I was writing because, what businesses want now, they don't want, it used to be the trend was 5 years ago, we need software, right? So I need a software for my payroll. I need a software for my point of sale system. I need a software for my scheduling. I need a software to manage my inventory. I want a software that does this. I want a software that does that. Now, what these small businesses are saying is, no, I just want one software.
One thing does everything.
Right.
Yep.
Well, how do you do that? If you're Square, how do you build the ideal software for hobby stores that allows them to do everything they want while also building the ideal one for a yoga studio, while also building one for a pet store, while also, well, you don't. I mean, if you're these huge software companies, they cannot do that. It's not possible. You can't build, really vertical specific software for everybody that can do everything. I mean, that's just not possible,
Right.
And so that's what their biggest, risk is now, is that now there's all of these other companies that are saying, well, we've got 3 developers and 2 salespeople and a CEO, and we're going to focus on yoga studios.
Right.
And that's all we're going to be doing.
Yeah.
And then it's like, oh, well, we could do that. And so, yeah.
Yeah. And there was another thing I wanted to talk that I just wanted to bring up very briefly, is that in the McKinsey report, they also found that small businesses like to deal with sales reps.
Yeah. You mean they like to deal with people instead of.
They like to deal with people.
Yep.
Right. 40% of those surveyed said they purchase services through a salesperson or a payments consultant.
Yep.
Which I think, speaks really, loudly to incumbent companies, because it will give them a broader reach.
Yep. It's why it's honestly, it's why the big companies come to me with the consulting, because they'll come and say, we've got the technology, and they'll say, how do we get more leads? And, we're maximizing Facebook spend. We're maximizing, online, we're maximizing Google AdWords. What do we do next? And I'm like, do you have a sales team? No.
Yeah.
So, if you're going after small business owners, they really like to talk to a person, and whether that's an inside sales team that's getting fed leads that you're, nurturing them, and you have SDRs and all that model, or if you're going direct to agents or whatever it might be, that's really crucial too.